Hello, I'm Jordan Blevins, Vice President and Senior Portfolio Manager at TrustBank Wealth Management. Welcome to this installment of Chart of the Month. We hope you had a very nice Thanksgiving. And as we all know, as soon as Thanksgiving is barely over, or sometimes even before, it doesn't take long for our attention to shift to Black Friday, Cyber Monday, all those sales, and the start of the holiday shopping season. According to a recent report from the National Retail Federation, an estimated 203 million U.S. consumers shopped during the 5-day stretch from Thanksgiving Day through Cyber Monday this year. That marks the largest turnout since the NRF began tracking this period back in 2017, and it also surpassed last year's total of 197 million shoppers. Early headlines suggest that this year's Black Friday through Cyber Monday period set new spending records. And that's important because consumer spending now makes up nearly 70% of the U.S. economy. That brings us to today's first chart, which looks at both the recent trend in U.S. economic growth and what's driving that growth. This first chart shows U.S. real GDP growth from the third quarter of 2024 through the second quarter of 2025. Over this period, economic growth has slowed from its earlier pace, but has remained steady, reflecting a trend growth rate of approximately 2.1%. This tells us that while the economy is no longer accelerating at the rapid pace we saw earlier in the cycle, it is still expanding at a healthy, sustainable rate, enough to support employment, earnings growth, and consumer activity. The second part of the chart shows what's driving that growth, and the key takeaway is clear. The U.S. economy remains overwhelmingly consumer-driven. That consumer strength has been a major contributor to solid corporate earnings and strong stock market performance this year. And with holiday spending off to a record start, the economy may have enough momentum to carry into the start of the new year. However, you may have also seen headlines this year pointing out that consumer debt is at all-time highs as well. While that's technically true, the more important question is whether households can comfortably service that debt and pay their bills. That brings us to our second chart. This chart shows the U.S. consumer balance sheet as of the end of third quarter 2025. In total, U.S. households now hold approximately $197 trillion in assets, with the majority concentrated in homes, retirement accounts, and other financial assets. On the liability side, total household debt stands at approximately $21 trillion. While that number is large in absolute terms, what matters more is how affordable that debt is to service. And as of the third quarter of 2025, the household debt service ratio is 11%, meaning households are spending just over 11% of their disposable income on those required debt payments. That remains low by historical standards. The chart also shows early delinquency trends, where we're seeing the most pressure in credit cards and student loans, while mortgage delinquencies remain comparatively low, an important sign of continued stability in household balance sheets. Taken together, this tells us that the U.S. consumer remains on generally solid financial footing, supported by high asset values and manageable debt servicing, even as pockets of stress continue to emerge. To be clear, while there are areas we continue to monitor closely, we're encouraged by the resilience we're seeing in the economy and in consumer fundamentals as we head toward the end of the year. At TrustBank, we've designed strategies to keep our clients well diversified across markets and asset classes. We believe thoughtful diversification is the key to managing risk and uncovering opportunity through all market cycles. As we close out the year, all of us at TrustBank wish you and your family a very happy holiday season. And if you'd like to explore how this approach can support your goals, we'd love to connect with you.